Good morning and welcome to today's pre-market video. Now in today's pre-market video we'll be taking a look at the FInNifty index. I'll take a look at what option buyers can do with it plus what option sellers can do with it. Before we go into the index, I would usually discuss the news, but there's nothing much to discuss there today. But this is as on the local front, as of when I'm recording this video the night before, there is nothing that is happened that is significant enough. And on the international front, basically everyone is waiting for two things of this week. First is the Federal Reserve rate cut. Second is the Japanese Bank of Japan's rate announcements, where they're expected to keep things the same, but they can throw a sudden spanner into the equation and mess up everyone's time. So these two are the news pieces which everyone is waiting for this week. So there's not much to discuss apart from that. Now coming to the FInNifty, there are two levels which I have not had to update. This is in my previous FInNifty video on last Tuesday. I had shared the resistance of 24,060 and 24,160, and the index has still been obeying those two resistance levels as it has not been able to go above. Now, when we look at the general price action of FInNifty, we see that look, it was in one big box range here, and this started in August and basically continued. Now on Friday and on Monday's trading session, FInNifty has formed another box range here. Now as we get closer to the Fed, this is not only particular for the FInNifty but for all the indexes, as we get closer to the Fed rate cut, I believe the market will become more of an option sellers market rather than option buyers market. This is that there will be more points of severe price stagnation, severe box ranges, which will break option buyers but benefit option sellers. However, once the Fed rate cut happens, then I believe the next 3 to 4 days will become an option buyers market rather than an option sellers market. So anyone who is trading this period, pre-Fed rate cut and post-Fed rate cut, should look at it that way. Pre-Fed rate cut, as we're getting closer to it, option sellers are going to make more money, intraday option selling, and post-Fed rate cut, intraday option buying is going to make more money than option selling. So this is as everything will have to sort of enter a stagnation as everyone is waiting for those particular numbers. Now when we look at it only in regards of FInNifty, you'll see I've put a resistance in a dashed line here and a support in a dashed line here. Now we have been trading in a box range of this zone. If we look at it, if we zoom in, we see that Friday and basically Monday's trading session has used my resistance which I said I gave last week, and this support to trade in a very narrow box range. Now any breakout above 24,060, I think right now can only go to 24,160 easily, and any breakdown below 23,950 to 23,880. So until the Fed announcement comes, I think there will be a high likelihood that FInNifty will trade between 24,160 and 23,880. This is a zone it will just basically stay in until we get closer to the Fed announcement. Basically, let's say the day before pre-market close, then we might start trying to see a spike onto one side of it. But until then, I expect the range between 24,160 and 23,880 to be the home. The smaller range is this one, which we have been using, but bigger range is that. Now, how will I trade it as an option buyer and as an option seller? Now, as an option buyer, the 24,060 to 24,160, you're not going to get a big amount of profit, but it's going to give you something. So that is more of a scalp trade, I would call it. And most will say it's 100 points, but put the 100 points in terms of the price, in terms of percentage points, number one, and in terms of the price of the index. This is a 24,000 rupee index. So 100 points is pennies. So that's why I'm classifying it as a scalp trade. If you look at it in terms of percentage points, it's nothing. So if we break 24,060, then along until 24,160. Option buyers will only get a clean move if we break 24,160, as that will open us along until 24,300 and 24,380. These are the two resistance levels on the top. So how it is basically one cluster resistance here, then another cluster resistance here. Break this cluster, will go along until this cluster. On the other hand, any fall towards 23,950, I don't think option buyers should try to short to 23,880 as it's too small a range to even make anything of significance. But if you break 23,880, that's when option buyers will get a clean move to the zone between 23,650 and 23,740. So as I said, option buyers, be cautious. Expect trade dual side moves between 23,880 and 24,160. Above that is when you'll get the big move to go long or short. Now, on the other hand, option sellers, in tomorrow's expiry, if you're more of a aggressive option seller, then I think you can sell calls above. I will give my breakdown. If I choose to play aggressive tomorrow, then I will sell calls above 24,060. So basically 24,100 and above calls. And if I decide to play aggressive on the put sell side, then 23,950 and below, which is basically 23,900 and below. But most likely I will go until this point and sell if I'm playing aggressive. Now, if you're selling options for tomorrow's expiry, I'm saying tomorrow because I'm recording this the night before, then like we did for the mid-cap Nifty yesterday, this is again a time when you'll have to enter call sells and put sells at the same time. Not like, let's say, last week when we were entering call sells in the morning and then put sells in the afternoon, or vice versa. This week, that's going to be more of the pattern, that you're going to have to enter call sells and put sells at the same time and then trade out that range. So if I'm playing aggressive, as I said, above 24,060, I'll sell calls. Below 23,950, I'll sell puts. If I'm playing cautious, then above 24,160 and below 23,880. So basically, cautious is 23,850, you can say, and below P and below, and call is 23 or 24,200 and above. So that's my cautious and my aggressive stance. I will most likely take the aggressive stance. So I'll sell calls and puts at the same time and then keep modifying the stop so as to protect the profits which are being made, because yes, we can have spikes because we entered a very narrow range. Trend catch has gone flat. So now, depending on what happens here in terms of the price bars and what happens to the volume, we can have sudden spikes. So that is why keep tight profit stops, as you do not want those spikes to take out one side of your options in a big way. So be cautious on that front too. That's it for today's video. There's not much to discuss for the FInNifty. If you liked the video, then hit the like button and subscribe to the channel, and also hit the notification bell. Any questions can be sent to the number given in the description box below. Plus, it can be dropped in the comment section below. Thank you.